Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, November 23rd. Obviously, this is a holiday shortened week. We've got Thanksgiving on Thursday, then we've got a half session on Friday. So please factor that into any short-term positions that you may have. I assume that liquidity will dry up the closer we get to Thanksgiving, probably be pretty slow on Wednesday afternoon, and then on Friday morning probably be even slower. So anyhow, just keep that in the back of your mind as you position and trade for this week, and think about how much exposure you want to carry over what is essentially a 4-day weekend. So anyhow, keep that in mind. Okay, let's get started. Starting first off with the SPY 2-hour chart, you can see that this was the Pfizer vaccine news 2 weeks ago on November 9th, and we've been chopping in a fairly wide range since then. I think now I've got this range from 350 to 364. I've dropped in a midpoint line of the consolidation range at 357. To my eye, that's a good bull-bear pivot for active traders. Anything above 357, I think the door is open for a push to 362, possibly 364. And as long as price stays below 357, I think the door is open for a move to 354 and possibly another check of the bottom of the box at around 350. Now, you'll remember that on Friday, I sent you a note that I put on a small hedge for today, expiring today, on 350 SPY 355 puts. Now, I still have them. What I'm going to do is kind of watch the open, see how price behaves around 357, and then if price can't get over it, can't break through 357, I'll probably leave that hedge on just for a little while. I won't be able to just sit there all day with it, because unless there's a move towards the bottom of the box, those would expire worthless. So I want to keep as much value as I can, but yet not give up the position right out of the gate until I see what's going on with price. Now, pre-market, it was it's about 10 minutes to 7 as I'm starting this video. ES was up about 0.5%. NASDAQ futures were up 0.36%, and small caps were up 0.9%. So if we're to take the futures at their word, the small caps are continuing to lead and NASDAQ continuing to lag. But here's the setup for SPY. Now let's look at the 30-minute chart and you'll see it even better. We had that dump into the close on Friday, and now we're up a little bit. I don't think we're above 357 in the pre-market. So here's where I'm going to see if price can break above and try to move up to this 360 area, or if it stays pinned below, and possibly a check of this top of this gap and a possible gap fill if the market becomes weak this morning. Notice that the momentum continues to fade, as does the RSI. So the bulls really need to turn that around and get an RSI breakout, get a PPO breakout, and a move back above the zero to kind of get back on track and make a move towards the top of the box. We'll see if they can do that this week. Qs, 2-hour. You can see that for the last several days, we got the sell-off after the COVID vaccine news. We've come up, and this 293 has been an absolute wall, and 290 has been a good floor that has held multiple times. So $3, the range between 290 and 293 is certainly tradable for those of you that are active, nimble, comfortable, motivated, all that kind of good stuff. To trade that range, you can, you're buying support and selling resistance until it doesn't work, until you get stopped out. But on any move above 293, I think you need to be long and then look for a move back up towards the highs at 297.50. Now, if 290 breaks down, I think you got to favor then the short side for a $3 move down to 287, and then potentially a test of the top of this gap at 285. Here you see that $3 trading range really, really well between 290 and 293. So I think for any kind of durable move, we're going to need to see, a breakout higher or a breakdown below to get, more of a sustained direction. But like I said, if you're nimble, you can make money in a $3 range. So just decide how you're going to, if you're going to try and trade that or not, or just wait for either the breakout or the breakdown. Moving on to IWM, outperforming all of the indexes. Notice how this chart looks different than the other ones. We had a little breakout last week above 177.63, and then we dropped back down and then tested this gap at 175.40 and have moved back up to the breakout level. Now, pre-market, I showed that we were trading around 179. So we're going to open up here. There'll be a gap below that you'll need to consider, for them to come back and back test it. That would be fine. But on anything north of 177.63, I think you can be long. Now, if price drops back down below, then probably favors a move to test the top of this gap at 175.40. And, if you're a nimble trader and you got to move back down to the top of the gap that looked like it was going to hold, that's a very objective place to try a long. Otherwise, if that fails, the next chance will be at 173.50 for a potential long back up. But like I said, right now we're trading right up here near the prior highs. So just watch your gap opening below, and don't get trapped in jumping in long and then have them backfill that gap right away. So be aware of that. Let's move on to our FANG names. Facebook has been pretty weak. There were a couple instances in here of Snap earnings giving them a pop, and then somebody else had earnings that helped Facebook, but on its own, without those other catalysts, really hasn't done anything. This gap has been filled. I still have the levels in there, but to my eye, 270 is your pivot. Anything below 270 favors a move back down to the bottom of this box at 266, and really probably down to this 264 level where was the prior low was tagged. So as long as it can hold 270, bulls have a chance, but anything below, I think the bears continue to make inroads by selling this off. And really, The bull move that I would buy would be a recapture of 273.50. You know, if this were to able to come up and take out this level, then you've got a shot at 279, 280. I would like that trade long, and you know, any kind of level that you recapture from below is bullish. So if there's sudden strength in Facebook and it can come up and take out this 273.50, I would take that long. But otherwise, probably lean into the short side. Apple, I adjusted this downtrend line to capture this cluster of price bars. But anyways, to my eye, 118 is your pivot. We've got a lot of reactions along that line. Here's, you know, there's several here, 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 all through here, and now a break below. I think if price comes up and recaptures 118, I think you can buy that and look for a move up to 120. But otherwise, if it can't, I think you can lean short for this move back to 115 to retest this prior low. Nothing very inspiring here on momentum or RSI. Both look like they're heading out of town. Not at a rapid rate, but more or less a slow bleed. And I think, as we've been discussing, I think money's coming out of the mega cap tech. Not in a big way, but in enough to make them really soggy and kind of favor the downside. Tesla, this is the one that's different of all the charts because of the inclusion in the S&P 500. We showed the big move the other day up to the old all-time highs at 502.50. It backed off Friday afternoon. I dropped in the fibs that line up with 466 here on a back test. I think right here at 490, you're kind of in no man's land. I think that's a hard trade to take unless you're really sharp with those opening ranges. The trade for me is waiting for a move back up to 502.50 to see if it can either take it out or it stalls. That's an objective level, or on a pullback down to 466 where you've got technical support and the Fibonacci 38% retrace level as support as well. Microsoft, excuse me here for a second. Thank you. Microsoft has been weak, just kind of working its way down. I think odds favor a move down here to test this gap in the prior low at 209. If 209 were to fail, that's certainly a location where I'd want to be short and try and capture this $3 gap fill move down to 206, and then kind of reassess. But at that point, I think it would find 204 where you've got this high volume over price bar and you've got some other reaction points back here in time. So what would change my mind is a breakout back above 212.50. If price can come back up here, take out downtrend resistance, break above 212.50, I think that's a buy, chance to get long with a stop just below, and then look for a $3 move, $4 move higher to this 216.50, 217.50 area where it's had trouble recently. But that would be a nice quick long trade if it were to break out here this morning. Amazon, just oscillating in this $100 range, really a $50 range between $3,100 and $3,150. sitting on that support here this morning. My advice is to continue playing these $50 windows. You know, below 3,100 favors 30.52. As long as 3,100 holds, I think it favors 3,150. And if 3,150 can be taken out, I think you've got a move to either 3,200 or 3,250. But if it were to lose this 30.50 level, I think you're going to be coming down here for a test of 30.25 and potentially all the way down here to 29.75. So these $50 levels have worked really, really well. Google, after the big earnings move, a lot of consolidation here in a $75 range between $17.20 and $17.95. I've got a midpoint of the range here at $17.60. If it comes down here to $17.20, you've got yourself an objective long with a stop just below. If you get stopped out, then price is going to come down here to 1,700 and test this gap and potentially enter the gap, where then you've got a big move down towards 1650. Now I just noticed this label's wrong. That's 1655, not 1555. I'll change that. But anyways, if price can get back above 1760, then you've got an open door for a run back to the top of the box at 1795. Netflix, I want you guys to watch this one real closely today. I kind of think something's brewing. Not brewing like news brewing, but price action brewing. If you see a move above 494, I think you should take that long. Look for a fast move to 505 and probably 515. I think that'd be a great trade to take if we got that move out of the gap, out of this trading range, not the gap, but above 494, to go ahead back into the open part of the gap up here to 505 and 515. It seems like this has been the level. A lot of chances all along the way to really break this 475, 480 zone, and there really hasn't been any selling pressure below that. So I'm inclined to think that the selling pressure is getting eaten up and the buyers are starting to gain a little bit of control. And I think above 494 would be a great place to locate a long with a stop just below and then look for higher prices. Now moving on to some individual names I'll go through quickly. I've had my eye on this Axon name. This is a defense name. This is the company that bought the old Taser company. So this company is into body cams and tasers and stuff like that. They gapped higher and now have been consolidating. I think this sets up well for a bracket trade. If you alarm 126 and 115, 126 will give you the breakout, and a move back to 115 would be at the bottom of the box where there is a gap to fill below, but it also may be a objective long entry down here at 115 as well, and then get that $10 move back up to the top of the box. That would be a nice trade to anchor along. I was looking at SMH, which is the semiconductor ETF, and we've had this well-defined channel here, as you can see. Top of the channel, bottom, top, bottom, top, and we've been walking along the top of this channel. Now, if things were to get weak, that would be a nice trade to take. Coming back to the bottom of the channel, that's $20. And I showed it to you here on the 60-minute chart. We've got a well-defined top here at 202.50, and we've got a well-defined trend line here. If you get a break below 200 or 199.50, that might set up as a nice short against the top of the box or top of the trend line channel here. So you'd have $2 of risk, and then the bottom of the channel doesn't come in until 185. So you've got about a 5-to-1 risk reward on a short if this breaks down. So you can alarm 202.50 for the top for a potential breakout, and then you can alarm 199.50 on a breakdown for a potential short. GDRX took a hit the other day on the Amazon news that they're getting into pharmacy. Gap down, and now it's moved up. Sets up well for a bracket trade here at, let's say, 41 and 33.75. If price were to break out here, you got a gap fill up to like 47. That would be a nice trade to make. Or if it makes its way down to the bottom of the box, you'd again have an objective long try there at much better prices. And then, of course, if it breaks below, then that's a whole new ball game. But I think this will eventually, after it consolidates for a little bit, I think it's going to go up and at least back touch this support level at 46. And then we'll decide whether it can break out or roll back over again. SONOS had a gap up the other day. Nice bracket trade setup. Set your alarm at $22.50 and $20. Of course, you can take it long on a breakout, or you can take it long at 20 bucks if it holds. But if it loses 20, then you've got a $3 gap fill to play for by flipping short. This is the oil and gas equipment ETF, making some headway. Oil's up this morning, so you may see this moving. I like it long on a breakout above 40 into this big volume over price void and above the 200. So there, I think we've got 2 layers of support. Once you get the breakout, I like being long against 40 on XES. Metals and miners. This is a recycle from over the weekend. I like this one long above 29, breaking out to new highs. So I would set my alarm just above 29 and see if you can get a breakout right here for higher prices. TAN, solar ETF, I like it long here. Long against 77.50 with a stop just below. I think this consolidation is going to break to the upside, and I think there's more juice and TAN to come. Big C, we talked about earlier last week. I like this one long. You're at a very objective level that held here, and held here. I think you can be long against 65 and see if we can get a bounce back up. If not, then you flip short for who knows where it might go if it loses 65. I would imagine it would come way down once it loses this IPO support level. So I think that's a good level to watch, like a hawk, 65 on Big C. And then lastly, this is Polaris. You can see that this 89 level has served as great support. Bunch of reactions back here. Here it held, all through here, here, and now here. I like this long against 89. Looking for a move back towards the top of the box. Notice prices at the lows, but RSI is building under the surface. PPO is building under the surface. I like this one's chances of moving higher, recapturing these moving averages and moving back towards the top of the box. You've got a well-defined level here that has held multiple times, and I think that will prove to be a good trading location. Okay, a little bit longer this morning, but I did want to give you some setups to take a look at. Put in your trade funnel, make sure that's full, make sure we did a good job recalibrating ourselves after the weekend on shorter term time frames on the indexes and on FANG. Let's see how we do today. Futures are green, so we'll see how much risk appetite traders really want to, what they want to do heading into a shortened holiday week. It'll be interesting to watch. So if you're new here, please hit the subscribe button and the alarm bell, and you'll get all my content each and every time I publish. Also, if you check out over in the show notes, I've got a couple links there. One to the website where you'll see a lot of helpful articles for aspiring traders and trading psychology and trade tips, things like that. You should find helpful. And also a place to sign up to be part of our team. That way you'll get emails each and every time I publish during the day, recaps. Whenever I send anything out, you'll get a nice email right to your inbox, so you won't miss a thing. And also you get an invite to our trading room where myself and the rest of the gang would really love to see you, get to know you, share ideas, build camaraderie amongst aspiring traders. I think that's really important, and if that sounds good to you, we'd be glad to have you. So, okay, have a good morning of trading, and I'll talk to you next time.